Here with me is Robert Kaplan, former president of the Dallas Fed and currently co-chair of the Draper Richards Kaplan Foundation. Welcome.
Thanks, Kelly.
So most significantly, let's tally up the impact. And we've all seen, I'm driving on the highway now, they're doing work and it says, funded by the I forget which of the three bills, there's $2 trillion in total the last couple of years. How big an impact are we talking here?
So at a 500,000-foot level, you're seeing construction spending is dramatically higher as a percent of GDP. To understand this better, you've got to go into each local market. And I do a lot of traveling around the country. What you see is many, many states, and the announcements are continuing, are announcing the largest infrastructure project in the history of that state. The impact of these government-enabled construction projects, when I say government-enabled because they tend to be public-private partnerships, is they not only affect construction spending, but they have a multiplier effect on the service sector. In a lot of these markets that are being done, you've got very tight labor markets already, so people are going to switch jobs to move into these new jobs. And so at a high level, it may look somewhat immaterial. At a local level, it's having a very material effect on these local labor markets and service sector markets.
Yeah, and I think in the labor market in particular right now, when we look at the claims number this morning, and things haven't really, they slowed last year. We kind of saw the implosion of a lot of the high value, tech stuff and things like that. But the resilience of the rest of the economy is the most notable thing about this year. You made an interesting point the other day that some of the localities have to spend this money before the end of 2024. And I guess the question is, do we want all this to happen? Because if you looked at it glass half full, you'd say, wow, the Fed's getting everything it wanted. Inflation's coming down and the economy's still strong. And isn't this, is Bidenomics helping, or is it, counteracting what the Fed is trying to do?
It is, in my opinion, it's blunting to some extent what the Fed is trying to do. It's not all bad because it means, I think without these projects, we might have otherwise been in a recession by now. So the economy stayed resilient. Many of these projects are good projects. These battery manufacturing projects are necessary. But many local officials are telling me, we've had this project that we've been looking at for 30 years, and because of the government money, it was marginal until we got the government money. And so all I'd recommend is I think it means if I were on the FOMC, I'd be leaning toward one more rate increase, although I'd have an open mind going in the meeting. But I would be urging, if I were at the FOMC, I'd be urging the Fed to do a lot more work in understanding not only what's been announced, but what's the forward pipeline. Because if this money were to dry up in the out years, I think you'll see these rate increases have a lot more teeth than it looks like they have right now.
And Chair Powell, he was asked about this at the last press conference. He kind of downplayed the impact.
He did.
And we always know there's a reluctance to kind of weigh in on what the administration is doing.
And I think he said it was immaterial, although it's helping construction. And maybe at a high level it looks that way, but I think this feeds right into the wheelhouse of the Fed. You got 12 reserve banks in these local markets that I go to. It's having an impact anything other than immaterial.
Yeah.
And
Look
I'm
at
hearing
the local papers. I mean, again, I grew up outside of Syracuse. The Micron plant up there, $20 billion. It's all they talk about. We've talked about some of the Midwest locations. Look at what's happening in Arizona. This is absolutely driving the narrative in a lot of these economies.
It is. And I don't think it's going to change the action for the Fed in the next meeting, but there'll be a point at which they're going to have to decide, should we really pause for an indefinite period? And I think you've got to understand what the forward pipeline is, because I think there's a lot more coming. We're not done all Inflation Reduction Act projects, Infrastructure Act projects. Even since I talked to you just 4 or 6 weeks ago, there have been a whole series of new announcements since you and I spoke about it.
Wow.
And I just think it would behoove all of us just to get a better grip on what the forward pipeline is.